Hello, hello. So today I wanted to go live to talk to you guys about why revenue doesn't equal cash. And one of the biggest misconceptions that I see among business owners is that many people think that if revenue is increasing, cash should be increasing too. Unfortunately, that's not always true. Revenue and cash are not the same thing. Not understanding the difference can create a lot of financial stress, especially for us business owners. So, what do I mean when I say revenue does not equal cash? When I say that, I mean it's just because you've made a sale doesn't actually mean you have received the money. Revenue is what you've sold, cash is actually what has been deposited into your bank account. For example, if I send a client an invoice for $10,000 today, I can record that as revenue, right? But if they don't pay me for 30 days, 60 days, 90 days, I actually don't have that money available to run my business. That's why revenue and cash are two completely different things. So, why does this happen? Well, this happens mostly because businesses don't get paid immediately. You invoice your clients, you might have a payment plan for your clients, you might have insurance claims pending, your contracts may have a net 30 or net 60 term. All of those situations create a gap between earning money and receiving money. The bigger the gap, the more pressure it puts on your business's cash flow. So that brings me to question number 3. Why do business owners tend to miss this? Well, I think business owners tend to miss this because they're focused on sales. Sales are exciting. Revenue is exciting. But nobody gets excited about accounts receivable. Nobody gets excited about collections. Nobody gets excited about cash flow reports unless you're me, and that is exciting. But most of the time as a business owner, you spend your time looking at what was sold instead of looking at what was collected. And then you're surprised when the bank account doesn't match the sales report, right? So as a business owner, what does this cost you? It creates a lot of stress. You may have great revenue numbers, but still struggle to pay yourself, cover payroll, pay your vendors, build your cash reserves or any reserve, emergency fund, anything like that. Invest in the growth of yourself, your business, your staff, your team. I've seen businesses doing 6 figures and sometimes even 7 figures in revenue, and they're still broke because they do not have enough cash available. So the problem isn't always revenue. Sometimes the problem is timing. So what should someone do in this case, right? The first thing I would recommend is separating a revenue tracking from your cash flow tracking. Start looking at how much cash came in this month, how much cash went out, how much is still owed to you, how long does it take your customers to pay. If you're on net 60, net 90, you probably need to call me so we can figure out how to fix that. These numbers will tell you more about the health of your business than revenue alone. So if you're focused only on revenue, you're only looking at half the picture. Revenue tells you what you sold. Cash tells you whether or not your business can actually operate. I just want to say thank you for joining me today, and I will be back tomorrow with another cash flow conversation. Bye.